Good morning, it's Harvey Jackson. Well, it's USDA day coming 11 o'clock Central. Corn and soybeans are both breaking out higher. Soybeans have been higher than the long-term trend line for a few trading sessions, but corn definitely broke through yesterday. Now, I think the expectation is that there's going to be lower yields on the corn and thus a bullish sentiment. So here's some of the numbers, the estimates. Expecting 2.1 billion bushels of corn, but there's still a pretty good size range here. Soybeans 0.304 expectation. Again, all they're doing is just taking the average number, which is like who's got the best track record should be what you kind of do there. But you can see the range is huge. But anyway, we'll just see how it all plays out. Brazilian corn, S&D, and these numbers are different than the cotton numbers as well, but not far off. You can see 77.6, and the CONAB number are I think that's exactly where it ended up to be. Crop production, yeah. So this is where it gets interesting, and we'll see if both of those numbers are lower than the previous estimates, right? So, and I think that's what the market is pricing in for both of those markets going higher. But it's going to be a good enough size data dump. So here we are, just slightly higher when they actually CONAB came out. White House hosted a biofuel talks. Trump administration nears decision on refinery waivers. So pretty complicated thing for myself as even a Canadian trying to figure out how these waivers and everything all work. But the more waivers there is for the small refineries, and the expectation is that the Fed is going to put the to make up the waivers possibly onto the big refiners again. That doesn't necessarily make it bullish, especially if there's going to be some lawsuits around it. So, this is a meeting to try to smooth out some of those possible lawsuits that are going to go forward as well. There's a 2.1 million RINs prevent reduced demand from renewable fuels. That's just in the 2023 to 25. So here, this is she's part of the clown show. This Anand and Rubio prioritize global issues, but they don't talk about the Canada-U.S. trade, and both of them are on trade. So it's absolutely ridiculous that she didn't even mention it. They know there's issues there. So quick look at the weather. So the drought monitor came out, and you can see that there's building drought, and I think that's cattle country if that wasn't me just looking at it again. But and you basically all that's cattle country kind of scenario. But anyway, some building drought in these areas here too. So your corn area, Illinois is 82% drought, and that's significant, especially when you're playing on here with the bigger percentages. Winter wheat, I'm just looking at this one because it's important as well. 39% of the winter wheat is in drought now. It's too early to be able to call it, but it's just, hey, take note of where the winter wheat major areas are, where there's dark green. And if you take note here, you've got like Washington, Idaho, Montana, Oregon, all some in the 90s, some in the 73s, but Kansas is only at 4. BAM weather for 3 to 4 weeks out, saying much colder than normal. In the blue area there, so it's going to be pretty cold. I would expect, or expecting more cold, but it is winter. Canola is slightly down as I speak here. So 650.20. Rapeseed is down as well. Soybean oil slightly up, a third of a penny, so at 50.57. Palm oil basically unchanged. Crude oil up $1.42, so it's $60.11 on the West Texas. The New York Harbor Freight is up 6 or almost 7 cents as well. Soybeans up 3 cents at 11.50, and spring wheat is basically unchanged. But the hard red winter and the Chicago wheat have caught up because they were lagging behind a little wee bit there before. And your French milling wheat is up $0.75 or $1 per ton. Corn is just up 0.5 cent at 4.42. So if you just look at this chart, and I put the Fibonacci retracements back on here, you're basically trading between the 23.6 and the 38.2. So it looks like it's actually 38.2 is your resistance point here, and your 200-day moving average. When you look at the November of 26, you're sitting right at the 50% retracement value. Rapeseed, you're sitting between the 38.2 and the 50% retracement value. when you put your retracement on there, but trading just above the 200-day and the 100-day moving average. The price of canola versus rapeseed in Europe is $134 higher price than Canadian canola price in Canadian dollars. Soybean oil futures trading between the 50% and the 61.8 retracement value, and all the moving averages are right in that area there too, but it's at the upper end of where it was before. So soybean futures, this is where it's kind of breaking out. I put the channel in here. You can see where it's actually trading through here. Light crude, right in the middle of the channel on the way down, but in the green as we spoke here. Canadian dollar, put in the channel here as well, and we're right in the middle of that channel on the way down here. But trading below all the moving averages, so slow moving, and the US dollar index basically just chopping away sideways here. If we look at wheat, and I did it on a continuous, so there's some gaps in here, but the reason I'm looking at this is I'm looking, if we can get back to the, I'm going to call it just shy of $6, would be breaking out above this long-term trend right here that we have established all the way back from basically the Ukraine-Russia conflict. Looking at Kansas in the longer term here, or short term, trading right at the, trying to get above that blue line. Same thing with the Chicago. It's a little bit below there, but the 100-day and the 200-day trading in the middle of those two. And same thing with the milling wheat. It's actually trying to get above your 50-day, so it's nowhere close to the same kind of range that the other wheat complexes are trading. Corn, this is where it broke out above the really good day yesterday, breakout, good volume as well. So we'll have to see if that continues. Definitely have to reward these type of days like today with some sales, I would think. Corn futures, this is just a longer term chart here, and it's broke out above that for sure. Let's have a quick look at the live cattle. Live cattle actually had a pretty bad day yesterday. Same with the feeder cattle. Both of them pulled back, and now they closed below the 200-day moving average. Lean hogs, a couple bad days there too, pulled right back. We're trading at the $78 for the December hogs, and the USDA will be out today, so expect some volatility today.